Hello, and welcome back to our series, Vertical SaaS, Fintech Disruption by a Thousand Cuts, sponsored by our friends at Pipe. In today's episode, we attempt to tackle the age-old question, build, buy, or partner. The challenge in vertical SaaS is building a broad enough suite of capabilities that you can solve for the vast majority of your target customers' needs. Building it all yourself is usually not an option. But when do you acquire other companies or products to round out your solution? When do you partner instead? And if you're going to partner, especially in the highly regulated realm of embedded finance, how do you decide which partners to work with? In this episode, Luke and I talked to AJ Axelrod, VP of Payments and Financial Services at Clio. Clio is a vertical SaaS platform that serves law firms. And as you're about to hear, AJ is extremely thoughtful when it comes to the decisions that get made to build, buy, and partner in the world of embedded finance. We talk about the work that goes in not just to building and launching embedded finance products, but to support them after they're live. We talk about how regulatory and compliance considerations color build, buy, and partner decisions. And we offer some advice for those who are just beginning to wrestle with these hard questions. I loved this conversation, and I think you will too. So, without further ado, here is AJ Axelrod, VP of Payments and Financial Services at Clio. Okay, well, AJ, thank you so much for joining us.
Thank you guys for having me. Excited to do this.
Well, we are very excited to have you. As we've been doing in this series, before we get into the main topic of this episode, one of the things that's really fun about talking to folks in the vertical SaaS space is finding a little bit out about what your specific vertical does and what your company does. So before we get into some of the discussion, would you mind just spending a couple minutes telling us what Clio does, and then a little bit on kind of your role and how the company has evolved over time?
Sure, happy to. So Clio is the leading cloud-based legal technology platform for law firms worldwide. So a lot of words there, but I think the simple way to think about this is for law firms all over the world, Clio is the software that allows you to effectively run your business. So if you're a law firm across practices, geographies, it's a great place to do everything from client intake to managing your clients and your matters, creating and filing documents, billing and accepting payments. I like to say there's sort of two sides of the law, right? There's like the practice of law and there's the business of law. I think, the Clio traditionally is more of the business of law and has started to blend in and sort of weave in the practice of law as well with many of the things we do. Like all vertical SaaS, it is about building something that's really great and tailored to that that user. And I'm super excited to be part of a company that is doing so much for what I think is really important part, frankly, of a functioning democracy is a highly functioning legal system. So if we can make law, the business and practice of law better, I think that's a good thing for the world.
I love that answer. And it's actually really cool to connect it to a larger mission as well. Two follow-up questions for you there, just because I'm curious. One is within law firms specifically as kind of the group that you serve, do you have like different types of users within a law firm, or like one particular user who's kind of the power user of your system? Like, can you take us a little inside the actual firm and like who uses it?
Yeah, if I think about, first think about the range of the size of law firms. I think some of us maybe through like pop culture or through business experiences know some of these really big law firms. You think of like Suits and fancy offices and maybe litigation or like corporate M&A, but law is much broader than that. And there's single lawyer law firms. We would call them a solo, like you have in lots of vertical SaaS. There's 200 plus, much larger law firms. Our sweet spot traditionally has been in, I would say that like 1 to 20 and then 20 to 200 size. And so the user varies depending on, size of the firm. If you're a solo, You are the attorney, you're the product, you are the CFO, you're the janitor, you're the admin assistant, you're all those things. And so you are all the things in the product.
Mm-hmm. Mm-hmm.
And as much of it, hopefully, you can automate and make better. You can with our product. As you go into bigger, more sophisticated firms where roles get more specific, we serve all those kinds of users, whether it's individual attorneys, a chief operating officer, an office admin, and depending on their role, they may interact with the software a little differently. But it's really built to be able to serve across sizes and practice areas. And so, sometimes vertical SaaS, we can think of it as just the vertical. Law is sort of verticals within a vertical. You can have someone who does litigation, someone who does business formation and compliance, someone who does immigration, someone who does family law. Their business models may be different. They may be contingency based or hourly fee or fixed fees. So there's a lot of variety within it, and our product's built to serve across those things.
Got it. Okay, that makes sense. So the other question that I've been selfishly trying to ask everyone who's been coming on for this series, just because I'm fascinated by it, is, there's a lot of subtle things, as you were just kind of talking about, that like vertical SaaS, the job is to solve for the last mile, right? And the little things that make generic software not as suited to serve a particular vertical or particular user as your software. What's a subtle thing about serving lawyers that those of us who haven't spent a lot of time working in that vertical may not know? Can you give us some insight into like that detailed level of like product design that goes into serving lawyers well?
I'll give you kind of two things that I think are different than my experience in some other verticals. The second one will be more fintech fun for us. But the first one is, I think more than anywhere else, these users read the terms and conditions. And
that's a good one. That's a good one. I hadn't thought about that.
They're pretty detail oriented. The words really matter. Every support call is a call with an attorney, almost all of them. So, I think the bar is high there, and you've got to be, on top of your game, which I think is great. Like, why not aspire to a high bar? But jumping into the payment side for a second, most businesses may have a variety of bank accounts for reasons of how they run their business. Maybe it's locations or they use them for different things. But if they're processing payments, it's kind of one merchant account. Maybe they do more because they want one merchant account per location or something like that. But it's just a place money goes before it hits their operating account. Law is not like that. Almost every single one of our customers has two or more accounts. And the reason for that is because they have what are called operating accounts and trust accounts. So the operating account, you should think of as just the run your business account. The trust account is different. So you may be familiar with the concept of like taking a retainer payment or a payment into trust. In law, that's a really serious thing. Those funds are technically client funds. They are deposited gross. So meaning, you can't say, well, it's $100 and we're going to net settle, $97 with a 3% discount rate. $100 goes in. The only way money comes out of that account is by transferring it to operating. So there's no debiting that account or net settling. Those funds are legally client funds. And lawyers have to keep meticulous details of all the work done against that, and how they log the transfers back and forth. So for us, it adds a layer of complexity in sort of like your hierarchy and your mapping and how you do funds flows, all those kind of things, how you do reporting, that, I think is a fun puzzle. It's also a carrying cost as you think about the development and support of the product. It is fundamentally different when we have to train a lot of our partners on why it's important and why it's different. And that could be across any financial product. But it's a nuance I think is easy to not think about. And then in the payments world, it's like, well, is it a merchant account? Is it a bank account? I'm like, no, it's a bank account held at a bank that is compliant with the state's IOLTA requirements and reporting. This is not like we'll just like do a thing in the product. This is high stakes, and mismanaging it is existential. It's a way to get disbarred, and so you can't screw that up.
No, yeah, absolutely. And Luke, maybe you can comment on this, but it's fascinating because I imagine doing what you guys do, you've probably been through this with a bunch of different folks, like learning the nuances of different verticals, and law in particular is an interesting one because what it makes me think of is in the embedded finance world, we tend to think of it as like, oh yeah, okay, so we have like federal laws that we have to comply with, and then we have state laws that we have to comply with, and that's like enough complexity by itself. But what I'm hearing is there's like, from a financial services perspective, federal, state, and then for serving law firms, then you go down to like state level, like bar associations and stuff. So there's just like myriad additional complexity that gets layered on. Any interesting observations on sort of things you've learned as you've dug into this or other verticals?
Yeah, sure. It's interesting. Like I'm actually licensed to practice law in Texas.
I didn't know
So
that.
a little,
That's interesting. You learn something
yeah,
new about your co-host
So,
as you do these podcast episodes.
a reformed lawyer.
I never practiced though for a second, but I have to answer that IOLTA question every time I like punt the license. Like every year I pay, I don't know why I'm still doing this, but I pay the fees. If I wanted to turn it back on, I can. I guess I like to have backup plans.
Sure, sure.
But it's interesting because yes, it's complicated. Like the only other like space that's as or more complicated maybe is medical with HIPAA and a bunch of data requirements. But when you get the legal stuff, if you simplify, you can actually create the same experiences for the customer, right? Like, yes, that money goes into these trust accounts, but it will be released into the operating account. So you almost just have to figure out a way, let's just ignore the trust accounts, watch the flow coming into the main operating account. You actually have a bit of a look forward view on what may be coming into the operating account, but based on what's already in the trust account. So it's almost advantageous from a risk perspective to be able to think about it that way. Like, yes, the retainer's been paid. It's going to come out at some point. The timing of that based on that type of client, like you can build bespoke models to figure out how it's going to come through. But if you really just focus on the right steps, and then again, like because these folks are reading terms of service, you better be dead clear on like transparency, as we always are for every partner. But like it adds additional nuance and a little bit of additional stress to it. But like we do things the right way anyways. And if you just simplify where the money's moving, everything still just works. You just have to be ready to answer the questions in a more sophisticated way sometimes, right?
But like to get like academic for a second, we talk about the thesis of embedded fintech is contextually specific, right? And if you're going to make it contextually specific, you have to like understand this complexity and then try to simplify it in a way that doesn't ignore it or do like disservice to it, but like embraces and appreciates it. And I think Luke's point around like bespoke underwriting, right? You can make it specific to this vertical and what's about it. What you can't do is just say, it's just like some standard lending product and you're just going to jam it in there and it's going to be fine. It's like, well, it's not just going to be fine. You could actually make something that's better than the average thing, but you're going to have to embrace that complexity.
It's so funny because like the way you describe that is like, that is fintech. Like there's all these rules you have to deal with and you got to simplify it and make it easy, but still like follow all the rules, right? Like that describes all of fintech basically.
Yeah.
It really does. Well, and again, I think, the thing that's so interesting and unique about vertical SaaS is that you're bringing it down to a level of like tremendous specificity, right? Because the whole goal, and, AJ, maybe you can comment on this quickly, is to remove the administrative burden off of these end users, right? Like our goal is to try to take as much off of their shoulders as we can. And I would imagine this is particularly true for the single person running a sole office law firm where it's like Bugs Bunny wearing all the different hats and playing all the positions on the field. Like that person is stressed enough. They really just want to focus on practicing law. Yep. And the trick is like, how do we take as much off their shoulders? And, I'm so glad that you mentioned the nuance point about lawyers being kind of by training paranoid and like really trying to look at the details and focus on that stuff. Like I would guess, and you can speak to this far better than Luke or I can, but like, wouldn't it be the case that for lawyers, like the goal is, hey, we want to give you a system that you can trust and offload some of this stuff to, but you're sort of a trust but verify kind of person just by your nature. And so like we have to demonstrate to you that we have all of this nailed. There's like a very high bar for trust, I would imagine, to automate even routine tasks for lawyers and for law firms.
Yeah, 100%. And we talk about this a lot. And now, like going back to your point around automating or simplifying, I don't think most people get into law and go to law school and go through all that so they can like do their end of month billing and record their hours. And, if you compared law to other businesses, you'd say like, wow, their realization rate or how much they're getting paid relative to how much work they're doing is not great. And, it's a place where the public is underserved, largely because it's either cost prohibitive because of the way the business is run, or because there's just like not enough lawyers with enough availability. And so, as I think about our software, anything we can do to make the business of law easier and then make the practice of law easier is an opportunity, best case, to help transform that legal experience for all, like our mission to get more service for the rest of the public. Maybe less altruistic cases, like you just make the lawyer's life better. Maybe their life is just a little bit better. They spend more time with their family or more time with their friends or something else.
Totally.
They're less stressed, whatever it may be, which is a pretty good, like less aspirational case, I would say. Like that's still pretty great. And so, I think there's that automation. Now, the trust but verify, right? Lawyers don't get a ton of like business training. Law school is pretty hard, and it's focused on the practice of law, not on like how you measure your business. And that means they're learning on the job in many cases. They might get good mentorship. Some people might just be like good problem solvers, but I feel like accounting's not a place where you become like, you just like intuit your way through it.
Right.
And so it's hard. I think what we want to do is, help them adopt the best practices, show them what good looks like, and then provide the visibility into what's happening. And that may be through reporting, that may be through, communicating how the steps work, just great user experience and user interfaces. But while you allude to them maybe having a higher standard, at least from my experience, like you should never, no matter what vertical you're in, you should never assume that your customers don't want that or don't need that. I think everybody that's running a business deserves to know what's happening and to be able to verify. And as we look towards a more autonomous law firm, maybe where a lot of these tasks can be automated, it can't be autonomy without visibility. It needs to be visibility. And so it's built into the way we do things. I think we know we have a high standard with our customers, but I wouldn't have it any other way.
It's so interesting. Like I'm looking at your I always love to do this with potential with folks. Is like you're on your product roadmap or your website. You have the accounting and financial reporting with big giant red new signs next to them. Like especially for this vertical, like I guess outside of tax attorneys, most of them really don't understand math that well. And that's probably why they went to law school in the first place. And I only say that because I went to law school too, but I was like, for different reasons, but to be able to help them with the problems that they need the most help with is magical. And to have the nuance of the vertical that lets you understand how to do accounting for all of the trust accounts and all of that stuff, and then just map it back to where they can just click a button and their accountant can go file their taxes. That's magic. Like that's where so much time gets taken up. And I say it all the time too. Like our goal here is to help these small businesses spend more time with their families. Like you guys are doing it with the nuance of the vertical all mapped all the way back to like what the ultimate use case of that data is, which is just like doing the reporting and filing the taxes and doing that stuff. It's the best, right?
Yeah. Yeah, we talk about, we had like leadership on site around fintech recently, and we were talking about like, optimizing your law firm. And I think what we all kind of talked around was like, maybe optimize isn't like the right word totally. What it loses is there's these like mandatory behaviors that happen. Like you have to file your taxes. They have to be accurate. Your IOLTA compliance has to be right. Like these are not, like I'll get to it later. I could marginally improve my cash flows. Like, no, these are existential. But there is also the optimize the business with that. Like you need the right reporting to understand the performance, the benchmarking. And, the reason accounting is on there is because like legal accounting is different than standard, business accounting. It's harder. And, we need to be able to provide that kind of service. There are whole large software companies that only do legal accounting. and are quite valuable businesses, but they don't serve the SMB particularly well. They're just too complicated. The billing is different. Everything's a little different, and so that is why it's important to us. I think we know if we're going to make this work, like I said, it's the business of law and the practice of law, and the fintech side is the business of law. I think mostly, at least, but it's core to what we need to deliver to our customers.
Most SMBs don't need a loan officer. They need a runway. Pipe gives small businesses fast, flexible funding by turning future revenue into upfront capital, right inside the software they already use. If you're building in vertical SaaS, Pipe gives you embedded capital infrastructure that scales with your customers, designed for how real businesses grow. Learn more at pipe.com/fintechdays. Yeah, absolutely. So we touched on something that I want to dig into, and this is kind of the focus of this episode specifically, is you talked about the fact that there are all these specialized software systems out there that do, accounting for law firms or do tax filing for law firms or whatever. Like, these things exist. But the challenge is, as you're saying, if we're serving SMBs, if we're trying to serve kind of as much of the market as we can, there's a need to bundle as much of this stuff together as possible, right? And I've always liked the phrase operating system for X as kind of a framing for vertical SaaS. And an operating system by default sort of lets you operate as much of the thing as possible in one place and through one platform. So when you're thinking about, as Luke was saying, like, this new part of the product that says new in red letters, this is very exciting. Yeah. When you think about that, or when you think about, hey, we could do more to serve this specific segment of the legal community that maybe we didn't have quite as much kind of product functionality built out for, fundamentally, you're in sort of, as we all are all the time, a build by partner situation, right? And we're going to get into the fintech stuff specifically in a second, but just broadly speaking, I'd love to get your thoughts on how you approach thinking about build by partner and kind of where the trade-offs are and what things are important for you guys when evaluating that.
Yeah. I mean, let me start by saying, like, we have over 300 integration partners available, in our ecosystem. So we very much embrace partnerships. Some of those are specific to legal. Some of them are not. There's all kinds of ways to do this. There's a spectrum of engagement. When we talk about fintech in particular, maybe this is an extreme answer, but you're always in a partnership of some kind.
Totally.
It's just a question of, like, what degree of partnership are you in? And I think it's easy to sort of internalize the build by partner and think about yourself and from your own needs. We all can talk about, like, your roadmap capacity, or, is this core to your product, or et cetera. I think actually looking at it from the customer's perspective is the healthier place to start. Or just to say, like, what's the need that this is, solving for this customer, or the want if it's not a need. What is best for them? And, like, what experience, what products, whatever it may be. Like, if it's lending, what kind of lending product is it for them? If it's payments, like, what should that experience look like for the client and the law firm? And then to start to design from there. And say, like, okay, well, what does that have to be? How might one get there? What is the landscape available? Is this something we can do? Is this something we can do ever? What's the level of risk associated with this? The compliance, the timeline, right? Like, the best time for any of this stuff to have launched is yesterday.
Right.
And so, we think about all those things. Like I said in the beginning, Clio is, I think, a company that really embraces the idea of partnerships, because we know that's a way to add value, for our customers and for their clients ultimately. But I think we also know that to do some things right, we have to own it. And so an example there might be accounting. There's, there is a sync with QuickBooks. We also offer our own product.
Sure.
And we have belief that that's really important.
It's like, it's interesting the way you describe that, because that's how I talk about building fintech at Pipe as well. Every single feature you want to offer, like through partners or wherever, to the underlying small business is a build by partner decision with a massively complicated matrix on why or why not you want to do it one of the three ways, right? We always try to build first, but like with international money movement, we ended up with Voiles for a reason, right? Because it just makes it easier for us to go faster in multiple geos. Like we don't need to build those integrations in every geo. That's crazy. Like that's just a simple example, but it's a very thoughtful way to go super fast, right? Knowing where you should like spend the precious resources of engineering versus not, right?
I think there's like lessons for us when we look at a business like Pipe as well. It's like, well, if we were going to do this ourselves conceptually, do we need to build a ledger? Do we need to build loan servicing? And I think you can look at companies, like Pipe, and chat with someone like Luke, and I won't spill whatever beans I may or may not know, but like, did they build everything themselves? The answer to that, right, as we just heard, is no. And so you start to say like, okay, well, if the more specialized business didn't even do all this, like how much should we really build all ourselves? Like what other people's choices tell us about how we should be thinking? I don't know how you thought about those things, Luke, but or how you see it with other businesses compared to ours. I'm obviously curious about it selfishly.
It's interesting because like the road. So I was at Intuit for 5 years, and I was at Square for 18 months. And like, you learn a lot, like watching those organizations make the same build by partner decisions. And it really depends on whether you're good at building or not. Right. Intuit is famous for just acquiring growth, like bought MailChimp, bought Credit Karma. That's their MO. It's fine to go buy stuff. And so like they're axed on buy because they need to move the needle because they're such a big company. Right. Square is axed on build, and they're pretty good at building stuff fast, but they ended up, by the time I was there, with like a 10-year-old Ruby monolith that slowed them down. I couldn't have changed the Square Capital product from single draw to multi-draw without refactoring the entire database, for example. And so you still, even with these, like your build by partner decision shifts over time based on what legacy tech stack you end up with over time too. And remember, Intuit was like written in Pascal, like quick in the first version was written in Pascal for the DOS operating system in 1984. Right. And so you end up with like, I guess the historical baggage at whatever company you're at helps dictate what build by partner looks like. And so because Pipe was like white space when I got here to decide like how to build stuff. Yes, we had some amazing infrastructure, but the fastest path to fully scalable what we wanted to do went through multiple different partners, right? And it was just way faster. We still, the thing that you have to do the best, customer experiences, we still own and control all of those things. And then like risk and risk engine and like being able to actually like handle the hardest part of this business. Like that's our core expertise. And don't care what else we do, but like those things we will always own internally forever because that's our core value add, right?
Yeah, it's interesting because the thing that I want to kind of circle back with AJ on a little bit is, as Luke was saying, like there are areas we want to own because they're core to our differentiation. There are areas where, and AJ, you made this point before, we kind of can't own every part of it, right? Like, I mean, unless we want to become a bank, it would be very difficult to do this entirely 100% ourselves. And then I think there's kind of that third squishy area, which is somewhere in between, which is like, we could do this ourselves, or if we found the right partner and we were able to get a better answer this way, we could kind of go either way. And I would imagine that a lot of the deliberation and time spent and decisions that end up being good decisions or bad decisions, that's kind of that middle area where a lot of that time, I imagine, would be spent. Is that a fair assumption?
Yeah, I think it's a fair assumption. I think we spend a lot of time thinking about both sides there. Like, first off, is this the right thing for our business to be doing, right? Yeah. And that's a complicated question to answer. So one of those things would be like, is this really a need for our customers? I think secondarily and really important, it's like, well, what right do you have to win? Or
so
provide
glad that you
this
said
service?
That. Yeah.
Like, why you? The payment story is well told at this point, but it's easy to understand. I think it's an important analog is like, as I've talked to platforms in the past about like, should you adopt payments? What model should you do? I think you start with like, well, what do you do that's immediately adjacent to payments that you do really well? Right. That's like core to your workflow and unique about you. And on like both sides of the payments, but potentially. And that allows you to build from there. So like, do you have a proprietary workflow, proprietary data that lets like make a better decision? The pillars, if you will, for financial services, right, are often like underwriting, cost of capital, and customer acquisition. And, as a vertical SaaS, you typically have a huge advantage in customer acquisition. You already have the customers. You acquired them anyway. And you have a surface they're interacting with all the time. Potentially all day throughout the day. You may or may not have like a data decisioning, underwriting, however we want to talk about it, advantage. You might have proprietary data. The question is like, do you understand it? Is it easily accessible? Can you do something with it? That answer is not always clear. I think in the lending case, the question I've always asked is like, well, how much incrementally better is it? The thing I like wrestle with sometimes, like we might have all this data, but like, is it a monumental lift to make it like 1% better than like a FICO score?
Right. How much are you gaining?
Is it actually better? Just because it's more doesn't mean it's always better. And, you almost inherently do not have a cost of capital advantage. And so you're going to have to figure out some way to make that work. And I think we then go back and say like, well, what about our workflow? What gives us this right? What do we know? As Luke alluded to, the trust accounts give us a pretty good view of what this business might look like in the future. The fact that we know all the billing behavior, including to the trust account, not just billing to the operating account, gives us a pretty good sense of how much of that is going to become revenue and how much will get returned to clients. We have pretty good ideas of what's going to happen with these businesses. And we have great distribution. What we don't have is a capital structure that should support this immediately at the rates they're willing to get. What we don't have necessarily is that the best choice for all of our developer hours is to build a bespoke underwriting model. Like even if we had all the data science capability in the world to do that and all the underwriting expertise, which we could probably find and hire, is that like the most pernicious problem facing our customers? And so then you start going to like, okay, is this like above the line or below the line on what we could do? And that starts to inform finding a good partner.
I love that. And like just from the outside, like Pipe has a bunch of partners and that allows us portfolio diversification, right? But many of our partners, if they did it themselves, would have enormous concentration risk in a single industry. And so almost by default, it's really hard to do it yourself, right? Some folks like Shopify and Toast are, but when you have consumer discretionary spending come down, like there's enormous pressure and you have to execute perfectly through cycle, right? And boards get concerned and boards say, stop, like what happened with Amazon. Like Amazon got out of doing direct lending themselves because of the whipsaw from COVID to e-com and then back. And some of their portfolios probably didn't perform that well after that, right? So the board's like, why are we doing this? It's rounding error for us. And it takes an enormous amount of people and it's an enormous amount of risk, both reputationally and otherwise. Like, why would we do this part? And like that to me, like hopefully pushes that like build by partner decision on at least the capital access side, always to the partners. Like, unless you like strongly believe you can do it yourself and are willing to invest 5 years to build it out and scale it with the right capital markets, like this one easily ends up in partner, right?
Yeah. The one where it gets confusing to me is like, what happens when it's like an industry specific product, right? In lending, there's like litigation finance. So as opposed to just like lending to the firm, but now it's really specific underwriting. And maybe you do know something really special about this case because all that information is in your system. So as you like, start to get through nuances, it's like, oh man, that's a really big area, of opportunity. When you look at the market, there are publicly traded companies that only do litigation finance.
Right.
But it's like a niche lending product within all of the lending products we might offer. And so it starts to even like complicate those decisions. There are banks that exist solely because of litigation finance. And so it makes it super complicated because, as Luke points out, like you have concentration risk, you have, unique underwriting capabilities. And then also like, that's one product amongst many lending products.
I love that example because I was at Sixth Street Partners for 5 years before joining Intuit, like distressed credit, all kinds of special sit stuff. I spent a bunch of time trying to figure out the litigation finance space. And to me, it was literally a dice roll. It's more like VC investing, where if you can build a portfolio of 1,000 cases that you're investing like millions of dollars each into, then and only then, if you're like better than 50% accurate, will you have good outcomes. But the amount of scale you need, the reason why there's publicly traded companies is you have to have enormous scale to actually have a portfolio of risks that makes sense. It's like investing in drug royalties or like drugs getting approved. The odds of them succeeding are so low, but when they do hit, it's like a 10x outcome. It's like VC investing. Like those are very similar. And like Pipe would never touch litigation finance. There's just, we have no reason to be in that space. It's the most niche specific thing you can imagine. And like even us who like know credit risk, we wouldn't touch it because it's just so different and so unique. One of the most niche things I've ever tried to figure out, actually.
Yeah. It's like, it's wild that it's like niche and huge, right? It's like, how are both of these things true?
Right.
But it gets into like another layer of the discussion we had, right? Like, can I do this? Do I have distribution? Do I have cost of capital? And then like, also, like, is this the kind of company we're building?
Right.
Like, is this actually like what we're supposed to do? And like, then you layer on your board and performance and cycles, and it's like, oh my gosh, maybe we pick a different spot on the continuum here.
Well, so I want to dig into that just real quick because I love this discussion. And I think it would be helpful, AJ, if you could give us a little bit. We've referenced a bunch of stuff, but would you mind kind of running us through the fintech side a little bit in terms of what you guys do and maybe a little insight into like how you got to each one of those pieces in terms of this decision-making process we've been talking about? Because I think that would give the audience some really good insight into like how you actually put those principles into practice.
Yeah. So if we rewind the story, Clio's about 17 and a half years old now, I think.
Sure.
Oddly enough, I think at our all company meeting, Jack, our founder, was showing a picture of like writing code while having his son on, him as a little baby. And it was like the coincidence timing of like the company's exactly as old as his kid. But it's a company that's been around for a while, and, our payments business is pretty big today, but it started out as nothing. There was an integration with a partner that was sort of your traditional referral style relationship. And as I think the market and investors became more aware and the technology became better, the partners became better to start building more of that payment stuff in-house, with like a PayFac or virtual PayFac type model, it became increasingly aware, additionally with our size, that we should probably own that. And so, Clio Payments was launched. Today it has tens of thousands of customers on it, processing hundreds of millions of dollars per month. Won't go into the details, but it's been an incredible growth story and one that is not going to slow down anytime soon. And we've really built around that. So law firms today can accept credit, debit, bank transfers. They can accept bank transfers as like an ACH debit or surface the ability to accept, essentially an ACH credit or a wire, which can be important for certain use cases. Apple Pay, Google Pay, QR code payments, tap to pay, text to pay. So we really, really tried to make this easy. Like, it should not be hard to get paid in law. It should never be a barrier to start serving work because it's like, I got to wait for a check. And that happens a lot.
Sure.
There's a lot of check volume here. So we've really leaned in there. As we think about the rest of, what's expanding, we have obviously accounting that's launched, and legal specific accounting. We own the ledger in that case. I think it's really important for us to start thinking about like, how do all of these things fit together? So the work I'm doing, the bills I'm generating, the payments I'm accepting, and the associated ledger entries, and being able to successfully execute on payments, and billing so that it is represented the right way in the nuance of legal accounting, which is different, as we alluded to. And then there's more on the horizon. I won't share it necessarily with dates or specifics, but I'll say that like every platform, we've thought a lot about capital because, as we talked about that right to win, like, well, if you're in the flow of payments and you have this better information for underwriting, it starts to make sense that you should start offering this. And Luke could probably answer better than me, but like basically every SMB survey forever, the number one need is I need money.
Capital. Yeah.
I almost like joke, people like, do we have product market fit for this? I'm like, guys, the question of like, do you want money always comes back yes.
Right. Very popular product, it turns out. Yeah.
So like, if you're asking product market fit, we might need to be more specific than just like, do you want money? But that's obvious. Legal fee financing, which shows up in sort of a buy now, pay later or something like that, is obviously something that exists in the market when we think about. And then I think it goes into the other stuff as well. Like, insurance is must buy. There's specific insurance to this vertical. Does that make sense for us? Do we have a right to win there? Is that just a partnership? And then same thing with payroll, as well as the other services. There's always like a fun little wrinkle in here, right? Like payroll, you might have a thing where you get paid off your billable hours or bonuses based on them. So you start to unpack and say like, it's not as simple as like, yep, nope. And do we have the right partners? Is this big enough? Can we build this? Do we have that control point right to win in our product? But I'm very excited about what the next, let's just say few months into next year look like on a financial services standpoint.
It's so like there's two things that jump out at me like that whole flow. Like the first one was the way you describe the buy, build, partner decision on payments really emphasizes that it's not a single point in time decision. It's for now, let's partner to go fast. And when the scale gets big enough, or we need to have different unit economics or can't negotiate a better deal with the existing partner, then you decide, I'm actually going to build this thing because I can get that much better of an outcome. Or you just use that to renegotiate with your existing partner and get a better deal or find a different partner. Like that happens over and over again throughout a life cycle of building any of these things you described. And the list you just went through, that's the same roadmap I've had since Intuit and Square and almost every partner we talk to, because the underlying pain points for small businesses are all the same. There may be way more nuance with your specific vertical, but like the needs are there. Like it's the same. And so everybody ends up building a lot of the similar stuff, but in different ways. So it's fascinating to watch how each of the folks we talk to like are doing it. It's so interesting.
Yeah.
You're very thoughtful about it, right?
I try to be. But I think like vertical SaaS is like, 80% the same, 20% different. And the 80% the same is like running a business is hard. And like, what are the hardest parts of like running a business? Like it's people. Like that's not going to change anywhere. You have demanding customers, you've got competitors, you've got workflows, you've got mandatory things like, like we said before, paying your taxes, buying insurance, all this kind of stuff. Those aren't that different. They're all 80, 90% the same. And that's a good thing. It means that there's good examples you can look to and say like, what about this is similar? That pattern recognition, if you will. Say like, what about that is similar to what I'm going through? What's different? And then how does that lesson maybe translate or not to what I'm doing? But I think like what Luke brings up around the continuum and the journey is really important. But prior to this, I spent a few years in private equity, and I had a consulting business for a period of time that did a lot of diligence work and consulting work. And I will say like, if you're going to go on that journey, which often is the right way to do it, you should be really thoughtful about the transitions. And you can be thoughtful in advance. And, I've seen too many partnerships that were not partnerships. They were predatory vendor relationships.
Right.
Where it was like a perpetual non-solicit on the customers with a payment processor and platform. That should be like against your religion as a platform. You should say like, no matter what, doing what's in the best interest of our customers is always a choice we should have, no matter what. And if a partner says something to you effective, like, well, that doesn't work for me, that's not a partnership. Because you need to be aligned on those values, those goals. You need to be clear that the way to be successful here is by really serving customers well. And like, I know, for example, if I was like negotiating, across the table with Luke and I said like, I can't do that because X, Y, Z, because it's not in the best interest of my customers. They didn't understand that. And I think the pressure I put back at him is like, the way you keep our business forever is by being the best possible solution. So I think like Bezos has said, like customers should be loyal right up until the second someone provides them a better product or service. Like, if you take that to the partnership discussion, you can say like, let's pick the best partner. And then like, you should continue to do that. Doesn't mean we can't have terms on our contract or durations or whatever. We can have those, but the end goal always has to be customers.
It's like, it's so interesting that you like the importance of the ancillary contractual terms and the partner agreements are way more important than the dollar cost sometimes. Like there's big payments providers that say, yeah, we'll do capital for you. It's a minute to do it. And when you click, you're signed up for 5 years of exclusivity. And you didn't even know it.
Which is like 2 years longer than your payments contract. And now you have this like weird off-cycle renewal thing. And it's like, what happened? Like,
right. Be like, so that's the less like, be careful on that. And the other is like, you actually have to build an orchestration layer type of business to where you can hot swap partners very quickly to just give yourself more flexibility, like, and not get tied in. If like for us, especially with international, that's even more important to be able to swap in a different KYC, KYB partner, or a different money movement partner. But now there's some like, because it used to be you'd have to find a different card issuer in each market, but now there's some that do it in mini geos, which kind of changes the game. Actually, I love it. But before you'd have to find the right partners to plug in each geo. And like, if you don't orchestrate like or build or architect your stack with like an orchestration layer, you'll never be able to move fast enough. So you have to think about the tech side of it and the contractual obligations at the same time, which most folks don't. It's just hard to, you have to be pretty, like I've seen it go wrong to actually know you need to focus on what you think might be a minor term in a contract, right?
If you're a small-ish vertical SaaS company, I think you're worried about things like, an exit in the future. We a valuable company to lock yourselves into things, it's going to impair the value of your company. Like it just is, because those strategic or financial investors want choices. And if you eliminate choices, there's just fewer things you can do to continue to serve your customers well and accrue value. And so like, yeah, those ancillary terms become like even less ancillary, but like you've heard me say it over and over again, I'll keep saying it, like you have to just continue to focus on your customers, right? Like what do we do that puts our customers in the best possible position to continue to be successful? And if you just like do that over and over again, every single day, you build a pretty good business.
This is why I love Pipe. Like we can like talk about all the things we can do for partners. All we need to do is literally do the pilot. And then every assumption checks out. They're like, wow, this is amazing. We've never lost a partner. But like there's other competitors of ours that overpromise and underdeliver and maybe have better sales teams. And so how do you filter for the ones that actually will do what they say they can do and are committed to it? Like this is the challenge I deal with all the time. Is like I don't want to oversell, right? I want to say like, this is what we're going to do, and we go do it, and just give me a 2-week chance to prove it, and we'll win, right? And then you'll never leave. And I know it. And if I'm confident enough to do that, like just give us a shot, right?
Yeah.
And it's all about like treating the customer the right way. Like if you don't have that at like top of mind, like that's what Intuit ingrained in my soul, which is like, we're here to help these small businesses succeed. We're here to help these like consumers pay taxes and help them spend more time with your family. If you lead with that, everybody wants to work there, and you're actually doing good for the world, and you can help your partners help their customers too at the same time. It all just fits and makes it a good place to be, right?
Yeah. It makes it an easier partnership evaluation discussion if you have someone where that they'll just stand behind their work and they'll show it before you sign any deal, right? They're willing to do things that, so like, one of the things I admire about Pipe is it's like, we'll do a test right now. You're not obligated to anything. You can stop it, can launch it however you want to launch it. And like, we'll just stand behind the results of our work, good or bad, right? But like, the confidence to say we'll do that, confidence in product that it'll work, and then like, look, platform in this case, Clio, you just make your own decision based on facts. It doesn't have to be based on sales or a relationship. It's just like, let's actually like put aside the speculation, the business case, all that stuff, and say like, just prove it.
Yeah.
Because like I said, the answer to the product market fit is, question is yes on money, right? But it's how that manifests, how many take it, what's their experience with it. Like those are different answers, and you can build a financial model to blue in the face, or you can just go do it.
Right. Right.
And so having a partner that allows that even before you've made a decision, it makes things a little easier.
Yeah, absolutely. That I think is actually a great place to leave it. You guys already answered the question I wanted to end on, which is like, how should you approach as a vertical SaaS company thinking through this, particularly through the lens of partnerships? Because as we've been saying, however much you want to build, how much you want to buy, there's always an element of partnerships as it relates to embedded finance within vertical SaaS. And so I think that was articulated wonderfully. And thanks for listening. This episode was brought to you by Pipe. Pipe helps vertical SaaS platforms unlock fast, flexible capital right inside their product. Learn more at pipe.com/fintechtakes. I know you're all busy, so AJ, thank you so much for joining us. This was really, truly like a nuanced and awesome discussion. I learned a lot, and in particular, now I know that if I'm ever serving lawyers in the future, to make sure the terms and conditions are all buttoned up and look great.
Thank you for having me. I think I now get to say like long-time listener, first-time caller, and would love to continue these kind of conversations, whether it's on a podcast or in real life.
Absolutely. Well, I look forward to it. Thank you, sir. And Luke, as always, this continues to be really fun.
Yeah, it was great. Thanks, AJ. Good stuff.
Thanks, guys.